Hey everyone, and welcome. So if you own property in Romania but you're living somewhere else, this is for you. We're going to break down exactly what you need to know about your tax obligations, and we're going to do it in just 5 minutes.
All right, let's just jump right in. If you own a property in Romania, there's a pretty good chance you owe a tax that you might not even know about. And trust me on this, finding out because you got a formal notice in the mail is definitely the worst way to learn about it.
And why is that? Well, it's because Romania's tax authority, ANAF, you can kind of think of them as Romania's version of the IRS, is really proactive. They're getting data from booking platforms, from property registries. So really, the smart move is to figure out what you owe and take care of it before they come looking for you.
Okay, first up, let's talk about the single most important rule you have to understand. This isn't some optional tax or a loophole. It's really the core principle of how Romania looks at foreign-owned property. The principle is called source-based taxation, and it's actually super simple. If your property is in Romania, any income it makes is taxed in Romania. It just doesn't matter if you live in Germany, the US, or, on the moon. The location of the property is the only thing that counts.
And this thing has a really wide net. We're talking long-term rentals, Airbnb hosts, commercial properties, even farmland. Your nationality? Irrelevant. And this is the crucial part. There is no minimum income threshold. Earning even 1 month's rent means you have to file.
Okay, so let's get to the most common situation for most people, long-term rentals. And the good news here is that the system is incredibly straightforward. Let me show you what we call the 8% rule.
And don't worry, the math here is super easy. We're just going to walk through a really simple example right now. So, let's imagine your property brings in 10,000 euros in gross rental income over a full year. That's our starting number.
Now, here is the really great part. The tax code automatically gives you a 20% deduction for expenses. You don't need any receipts, no proof. It's just a flat deduction, plain and simple.
So that brings your taxable income down to 8,000 euros. And that's the number the tax is actually based on.
Right. The final step is just a flat 10% income tax on that taxable amount. So 10% of 8,000 euros is, of course, 800 euros. And that is how we get to the 8% rule. See, your effective tax rate on your total gross rent works out to a very, very manageable 8%.
Now, you might have seen some chatter online about recent law changes, so let's be super clear on this. For long-term rentals, this 20% deduction has been the rule since January 2024, and the new laws kicking in for 2026 did not change it. This 8% effective rate is stable.
All right, let's switch gears and talk about short-term rentals, like Airbnb. This is where things get a little more complex, and you really need to pay closer attention because the rules here are actually changing.
And you can see the difference right away. Long-term rental tax is pretty much settled and predictable. Short-term rentals, on the other hand, are in a state of flux, especially with a brand new law that's going to take effect in 2026. So, the key takeaway here is you just can't assume that simple 8% rule applies. A new law is shifting away from the old flat-rate income norm system, and it's moving toward taxing your actual net income. The specific deductions you can take, they're still being finalized. So for short-term rentals, getting professional advice isn't just a recommendation, it's pretty much essential to get this right.
Okay, so how do you actually file?
Well, the whole process revolves around a single annual tax return. It's called the Declarația Unică, which basically just means the single statement. It's really a 5-step process. First, you've got to get a Romanian tax ID, called a CIF. Second, you register your lease with ANAF. Third, you file everything online. Now, step 4 is the tricky part. In that same return, you have to declare the actual income for the year that just finished, and you have to provide an estimate for the current year. Finally, you pay whatever tax is due. And you need to remember this date. The deadline for all of it is May 25th.
Of course, the million-dollar question is always, am I going to get taxed twice? Once in Romania and then again in my home country. Let's look at how international tax treaties make sure that doesn't happen.
Well, the good news is you're almost certainly covered. Romania has this huge network of double taxation treaties with more than 87 countries. These agreements were literally designed to solve this exact problem. These treaties usually work in one of 2 ways. With the credit method, your home country might still tax the income, but it gives you a dollar-for-dollar credit for the tax you already paid to Romania. Then there's the exemption method, where your country just ignores the Romanian income completely. Either way, the result is the same. You do not pay tax twice on the same money. Look,
Here's a quick, real-world example from a client we have who's based in Germany. They had 14,000 euros in gross rent. We applied that 20% deduction, then the 10% tax, and their total tax due in Romania was just 1,120 euros. That's that familiar 8% effective rate in action.
And this really brings us to the most important point of this entire guide. For most people, that 8% tax, it's not the problem. The real problem, the one that gets super expensive, is all the penalties and interest that pile up when you don't file on time. The biggest risk you face isn't the tax itself, it's the delay.
So as we wrap this up, the question you should be asking yourself is this. You've invested in a valuable asset in Romania, but have you taken the right steps to make sure your tax compliance is just as secure?